Hey everyone, this is John DeRelay, Head of Revenue Management Education at Wheelhouse, and today we're going to do a deep dive into Santa Rosa Beach's market data and take a look at how things been going to start out Q1. We're going to start today by looking at some general kind of market data across the entire market, taking a look at some of the trends, and then what we're going to do is we're going to dive into some much more specific slices within the market, both in terms of area and also filtered down into listings that are going to be potentially a little bit more applicable for both all bedroom counts and the larger bedroom counts to see if we can truss out some trends for what's going to happen in 2025. Starting with the general market data, we can see some basic high-level highlights. Active listings are up quite a bit this year. That's a trend we've been seeing across many markets, particularly on the Gulf Coast, but quite a lot of listing growth. Although when we're looking at this kind of Santa Rosa Beach market, we're not seeing quite as much occupancy and ADR pressure as we've seen in other areas, which is a good sign. Looking at year-over-year occupancy trends, we can see that there's been a little bit of a downward movement over the past couple of years. If I pull 2022 off here, we just look at 2023, 2024, and 2025, we can see that there were some pretty big decreases last year, particularly in the low seasons, however, and a little bit in the spring. However, summer and fall stayed pretty on par with previous performance, which is a good sign. As we go into 2025, it's interesting to note that we are not, even though that this is a very low time, so we wouldn't expect a lot of occupancy, as we've looked at other Gulf markets as part of this series, we've seen a lot more pressure in January and February in particular. And with January having just wrapping up a little bit higher, that looks pretty good. And February's position seems very strong. Now, this is probably driven a lot by snowbirds, so a lot of this business has already come in. But the fact that we're not seeing significant decreases, as we have in some other markets in the area, is a really good sign. Now, I like to just check, we were looking at adjusted occupancy, but I like to just check this data for regular occupancy too, particularly when we're looking in that low season, because we do know that people block off their dates. And you can see that we're seeing a similar trend. January slightly higher than the previous year, and February starting the month out extremely close. These are good signs for the market overall, even though we're still in an extremely low time period. Another thing I like to just check at the kind of trend level is lead times. And while generally 2023 sees a decrease from 2022, they're not that significant here. So a lot of people have been hearing how lead times have been getting shorter. That does appear to be the case in the market, but really the last 2 years have been much more stable, particularly than a lot of markets we've seen, despite changes to the inventory overall. And so I think that's a pretty good sign. Obviously, if I put in this year, it's not going to tell us that much, mainly because most of these dates are in the future, so it's not that helpful. There should be some expectation, I think, if we're listening to what other people are experiencing, that lead times are going to be a bit shorter. However, because this market seems to be a little bit more stabilized, this market area, Santa Rosa Beach, we may be able to not have to have the same expectation of the booking window shortening quite as much as we have in other places. The warning for you then is, if this market hasn't had the booking window shortening as much, you may want to be careful about pacing behind, because it may mean that this market is actually missing a booking window. If you start to pace behind, that isn't just happening shorter like it might be in nearby areas. The last kind of major trend I want to look at with you guys across the entire market is going to be this asking rate segment. So asking rates are the rates that we're seeing posted out on OTAs. And I think a lot of the kind of stabilization and occupancy here, quite a lot of that probably has to do with the fact that rates themselves have been pretty stable. We actually see some attrition. It's not uncommon in other markets, especially markets that have been having a particularly hard time, to see really big differences where they're really trying to push the rate. That doesn't seem to be the case in Santa Rosa Beach, where people are staying pretty stable, accepting a little attrition. And we've put in this year, we're also seeing that those rates are staying pretty similar. So January and February looking a lot like the previous year. They are starting to crawl up a little in March, April, and May. So I think, and then especially into the summer. Now we're really early in the window. I would expect those to come down, but it's something to keep in mind as some of this early performance in January maybe, and even, when we look at the fall of last year, which seemed to perform pretty well in the market area, that's probably due to the fact that people aren't being too aggressive with asking rates here. And if that trend starts to shift a little bit, we really want to be aware that any issues in pacing may be just because the guest is very sensitive. Now, keep in mind, there may be other areas around you. We've looked at, Panama City, Destin, Okaloosa, and if those areas start to see issues in their pacing, they may also become very competitive in rate to you. So I think it's going to be a really touchy year from the rate perspective. Overall, Santa Rosa Beach hasn't pushed too hard, and it seems to be working out. But you do see that trend start to shift a little as we get out into March, April, and May, and especially into June and July. Now, we are early in the window, so there's plenty of time to see how things shake up, but it's just something to keep in mind. Now, jumping just back over here to the occupancy, I just wanted to take a quick look at May occupancy, because that was an area where, between March, April, and May, we saw those rates kind of start to float up a little bit. And I just wanted to see how they've actually actualized year over year. Looks like last year, April was pretty rough. That's going to be hard to compare this year because we have Easter. So, when we dive into the more specific listings, I think it's going to be interesting for us to kind of take a look at some of these trends and how the actual holidays themselves are shaping up. So let's go ahead and jump into our first kind of deep dive into a more specific set. So as I showed you before, this set is going to be a little bit tighter area around Santa Rosa Beach in particular. And we're really just going to look at listings that had more than 50% occupancy last year, so quite a bit of evidence of performance, and were available for half the year or more. Looking at this data, we're already looking a little bit light at the beginning of the year. It's already February, obviously, but we are seeing advanced booking. It's stretching out pretty consistently, so there's pretty consistent bookings, but dates aren't spiking up substantially higher kind of across the board. I would expect to start seeing more bookings, especially further out as we get into summer. We should start to see, June and July start to pick up consistently from this point forward. We should start to see pretty substantial increases across the spring. And we do see a little bit of that here. We do see that the booking pace across the spring is much higher, that this is tailing out and stretching out. Although it's not quite as pronounced as I would like to see at this point. I would expect us to be a little further into the booking window. Now, I know that a lot of market data shows that we're pacing pretty good for summer in a lot of these markets. I think that's still the case here, that the market was pacing ahead, but we're so early in the booking window, those numbers are still pretty small. So it's really going to be prime time over the next 30 days to see that these start to pace, that you stay on pace, and that you start to put reservations on the books consistently, not only for spring, but for summer as well. Looking at the overall rate plans, we see probably what we'd expect. Low season is going to be pretty low. Now, keep in mind, this is a mix of bedrooms, so the absolute value is not going to tell us a ton here because we got a lot of different kinds of product in the market being represented. But you can see that overall trend. We see this big kind of spring period. Now, what's interesting to me when looking at these rate positions is the kind of smoothness of this climb from March all the way into April, the dip into April, and then a little bit of a bump here. I'm not exactly sure that that's going to match what the kind of spring season looks like this year. I've heard some pretty mixed things from folks about what dates are turning out to be strong. And in a moment, we'll look at another view and see if we can trust this out a little bit. But I do have some questions about if the market is really pricing the highest demand days in spring correctly. And I do have a concern that if people are priced a little too high on certain dates, it may not be totally clear yet what dates are going to be the best. As we get into summer, we expect that to be high season, have some of the highest rates in the market. That seems to follow. And then looking out past summer into the fall, obviously that's going to dip that back down into a shoulder, look a lot potentially like April. Now, I do think that it's interesting to note here that even though this is very far out, people tend to be a little bit more conservative on rate here than they even are in the spring. I've wondered where the last couple of years in, when we looked at that Santa Rosa Beach data over here, and also in a number of other markets, fall seems to be doing better as a shoulder season than some areas of spring, barring high demand dates. But I think the market could learn a lot from, there's a big expectation that fall is not going to be as strong except for a couple of dates in the area. And I think the market's done a good job of driving occupancy during those lower demand dates. I think it's really imperative this year for the revenue manager to be able to take some of those learnings on the low demand dates and apply them in the spring. As we know, not every date is going to be super strong in spring everywhere. And I think the market does a pretty poor job of reacting to that quickly. And so if you already see what dates are going to be pacing ahead, what dates are going to be strong in the spring, if you're seeing that in your bookings, I would really advise that you take the dates that aren't getting bookings and really adjusting those early, trying to beat the market on pace, beat the market on occupancy overall, and take a larger share. Let's jump in a little deeper and look at the actual occupancies at a daily level, because I think that this kind of trend I'm talking about is really important. So in green, I have last year's occupancy levels by day. In 2025, in purple, we have this year's occupancies for this group of listings. And I think this big thing to note is how different the shapes are in this spring time period, right? When we look at last year, we have a really big March 11th and 12th. We have a really big March 23rd through April 5th. And this year, that shape is turning out to be a little different. For one, it looks pretty consistent. That March 11th still looks like it's going to be a spike, but then it's quickly being followed by this 16th to 26th time period. I think that's really interesting because this is an inverse shape here. This was not very high occupancy last year, but this year it seems to be pacing potentially at the top of the March dates. And so if you haven't adjusted your rates to be able to keep track of that, or if you're not seeing it in your data, that's interesting. If you are seeing it in your data and there's mismatches between rates, there might be a lot of opportunities there. Now, as we go a little further, there's a little bit of a drop off at the end of the March. I think that's pretty interesting. That's another inverse where last year that was a big spike, but this year it's kind of dropping off. So again, spring not really looking the same as last year. So if you have a rate plan that you've kind of copied over, there may be some concerns. And it looks like the demand is pushing a little farther into April than we might expect. Now, you can see it's going kind of all the way out to the 10th and 11th already this year. Pretty interesting, maybe some opportunities there. I would expect there to be a little bit more of a spike. We are seeing an early spike for April 18th to the 20th. So Easter is going to be late this year. It's not going to overlap with some of the spring break stuff. In this market, we are seeing a spike already, which is good. I would expect this to book a little later than Easter would have last year, but it's definitely going to be a key date to watch, and it's going to be key to make sure that these specific dates that are already getting demand, that you're optimizing those and then taking any other dates and just dropping them early, because there's plenty of spots here last year where the occupancy was extremely poor. And if you can just beat the market on occupancy there, you're going to add a lot of padding for the year for, what you kind of put on the books. I just want to kind of drive that point home by pulling up the asking rates again, but this time for this specific set. So we're looking at a really specific set of listings that had evidence of booking last year, that were open most of the year. And again, you can see that in this spring period, there's just a pretty big mismatch to what was happening year over year. Now, that should be expected. We're already seeing different booking trends. It's actually probably looks pretty good in the sense that when we looked at the occupancy trends, things were a little bit more smoothed out. It seemed like the demand was spread out a little bit more. And we are seeing that in the rates compared to last year where we saw these big spikes. But you just really want to pay attention here that the key is know what dates are booking, spend time optimizing and looking at those, figure out what days aren't booking, and get ahead so that you can steal occupancy market share. Jump over to just a view of our larger units, our 4-bedroom plus. I like to look at this because booking windows tend to be a little earlier. Sometimes you see a little bit different trends and it can be a bit of a bellwether. Obviously, there's going to be less of these in the marketplace than our previous group, so I've really reduced the criteria here, really just looking at all of them that I can see that have had really any kind of openness in the market since the last year. And looking at this, we're not seeing too much different. Now, we are seeing a little bit more stretching out in a little bit further. We are seeing a little bit more of booking volume in that end of May time period than we did in the smaller ones. That makes sense, expecting these to have a higher booking window. I would expect this to have a little bit stronger performance in the spring already. March is coming up. These listings have to be booked if people are coming, and we're just not quite seeing that. Now, what is interesting is we do see in the rate that the difference between the high season and the low season is a little bit more relaxed, so people aren't quite pushing as hard in March as they are in the summer. That does make sense considering where we are in the booking window, but it still might need to come down a little bit more because we really want to see production for spring. This should be the most powerful point in the booking window coming up over the next month, and you really got to work to get those on the books. Jumping over to our daily occupancy trends, I actually find this to be really helpful because these rooms are so much bigger, they have to be sold earlier. The differences are going to look a little bit more pronounced, and it might give us a little bit more information than we're seeing in the smaller room types where the demand is kind of smoothed out. And you can see here that we do definitely still have a difference in year over year trending, but we are starting to see some dates that are more pronounced that are telling us what's not quite as strong, right? We can see a little bit of a dip here, but this is still pretty flat all the way from March 9th through March 27th. This post March first week of April, though, is pretty weak. So that's a huge inverse here. We're really starting to see that show up. Now, you want to check if we've really taken rates from last year because this was really strong and just superimposed them. It might be that that's not where the demand is going. But it seems like that is a spot that we might even be able to extrapolate to the smaller units and say, hey, maybe this is going to be a weaker time period. Maybe I need to get ahead of this one. Going further, that next week is actually looking very strong, though. So we get a little bit of a reversal there. That week that was bad last year is actually looking pretty strong. Another opportunity, especially in those smaller rooms, to kind of extrapolate that forward and say, hey, maybe we can hold a little bit more here. And what's interesting is the Easter bookings aren't quite showing up as big of a blip here. And so I have a hunch that the smaller properties are probably not pricing as high as we are in the bigger properties. And I think we really have to be careful this year of overpricing the big properties, particularly because Easter is so late. There may not be as much opportunity for people to make a big trip, or they may be making that big trip earlier or planning it in another time. And so this kind of concerns me a little bit that the Easter time period really doesn't look any different than any of the other dates in April and early May. That should be kind of a red flag and make us review the premiums that we have in place. Thanks for spending some time with me deep diving into the Santa Rosa Beach market data. It's early in the year, so this data is going to be shifting a lot. It's already shifted a lot since I was first looking at it in January, and I expect a lot more to happen over the next 30 days. So if you want to dive in, please feel free to hit up Wheelhouse. We're happy to walk you through some of this market data together. You can also sign up and access both the dynamic sets where I was looking at the deep dives and our market reports to get access to the market data on your own. Thanks and have a great one. Bye.